the Dow Jones. Last week kind of recovered a little bit, but last week it fell. It was a down week for stocks last week. So is this a early warning sign of what could potentially happen in 2025 with the market?
Nope. I'm gonna make this very simple, very short. The Christmas trade is over. People have taken profits. People have been up all year. Some tax loss harvesting, but also too, with the FOMC announcement that had an effect. Mm-hmm. Also, futures expirations happen that Friday as well. So mark off every month when expiration begins to happen. But for those of you who are like, hey, the market's crumbling, the market's been doing great all year. One of the best years that I can remember as an investor. So I think this is a sign of the opposite of what's going to happen in 2025. But the Christmas rally trade, as we've known it, maybe how it was 10 years ago, traditionally is over. And not as many people are into the market. And lastly, there's no asymmetric risk to the upside, a great place to buy that's going to give me an amazing return in 12 or 13 months. So that's why the market slid a little bit. So, but also too, a homework assignment that I put on IG, write down what the point totals are every day. Mm-hmm. And if you were trading 2019, 2018 off that FOMC announcement, it was very similar to what happened this past Friday. So if you know what the point totals are, positive and negative, for each day, you can go through your calendar like your own Farmers Almanac for the market and have an expectation for what the market should do.
Yeah, this is easy, no? Like you said, when Powell spoke, we saw a pullback, and we kind of alluded to it last week when we were talking about rate cuts, how they've kind of been quiet about how many they were going to be in 2025. There's now rumors that there's only going to be 2, which is a decrease from what we had in 2024. Yeah. Slight pullback. But I'm glad that Chris, shout out to Chris Johnson in that episode, if y'all didn't check it out. He said, look, man, people are going to take profit. In fact, if things don't sell off, there won't be new buyers to come in to add liquidity to a position. And so you kind of saw that when Powell spoke. But also, right, we talked about quadruple witching. We talked about when it happens. Quadruple witching happened on Friday. And so when we're talking about options contracts, when we talk about futures contracts, they expire on the third Thursday of the last month of the quarter, right? So there's 4 quarters each year. So we have March, you got June, you got September, and you got December. The third Friday of those months, there's quadruple witching where most contracts expire. And so you take that with the amount of increase that the NASDAQ has had, I think up 30% this year or 32%.
Amazing.
Which is ridiculous because it was 32% last year, which is like, you don't really see that. The S&P up 26%, which is absolutely incredible. The Dow itself is up 25%. These are ridiculously impressive years, right? To have them back to back is incredible. To have them as a singular event would be incredible. To have them back to back is just absolutely incredible. So, I mean, you're going to see sell-off leading into 2025, but does that mean, is it an indication of what 2025 is going to look like? No, I think we still see growth. I don't know if it's in the 20s. But I think we could be okay with anywhere between 11 to 15% growth in all the major indices. I'll be interested to see that, at least for the first half of the year. We'll see what happens in the second half. Yeah. For the first half of the year, for sure. Yeah, so I'm not too worried about 2025.
Yeah, don't be worried at all. Hold for a long period of time. And I know it's not the answer everyone wants, but if you hold for a long period of time, these worries go away. Think about it. When we first started the show, the expectation for the indexes were 7 to 12%. Right. Now you could double your money in 4 years just by holding 2 Tech 2 index, no stress. Hold for the long term, please.
Yeah. I think it's also
or be broke.
It's also important.
That's the other option.
To think about cycles. So shout out to Josh Brown when he came on a long time ago. We talked about this with a few other people as far as the political cycle.
Yeah.
Traditionally, what it has done for the market. So traditionally, usually in political cycles, the first year of a presidency is relatively weak. The second year is the most volatile to the downside. The third year is the strongest. And the fourth year is strong as well. It's good, but not as strong as the third year. And that's kind of exactly what's happened with Joe Biden. remember when we had that bear market, that was
Yep.
in year 2 of his presidency. And then year 3 of his presidency is when stocks went crazy. And then year 4 of his presidency this year, when stocks they did good as well. So if that's an indicator, then stocks it'll be a weaker year for stocks. But of course, it's an unprecedented situation with Donald Trump coming in and so many new changes that's going to happen on a political landscape that could potentially, not carry suit. But traditionally, that has happened. That's what usually happens with the situation. Is that the first year of a president's term is a weaker year for the stock market. That's just the historical, if that means anything to you.